ADvTECH's a listed company on the Johannesburg Stock Exchange with interests in premium end schooling, independent tertiary education, and staffing and recruitment. Today we announced on SENS our interim results for the year ended 30th of June, and they represent a continuation of a trend of growing profit improvement over the last little while. Revenue was up 9%, operating profit up 17%, and headline earnings per share were up 14%. Interestingly though, I think the two main highlights of the results are not in those three simple figures. First of all, the business converted its net profits to cash at the rate of over 300%, a conversion ratio that's been maintained for the last several years in each of its first half performances. During the second half, we used quite a lot of that cash to fund both operations and capital expenditure into the business. And we've therefore been able to invest some R1 billion in capex in the last 3.5 years. And this is the other exciting facet of ADvTECH, is our clear strategy of investing some R3 billion in the business that will more than double our capital base and almost double our student numbers over the coming decade. What makes this plan particularly exciting is that as fast as we are able to implement the projects approved by the board in this plan, so we add new ones and maintain the forward-looking project register at some R3 billion. Unpacking the results by division, the revenue growth of 9% was led by double-digit growth in both schools and the tertiary division. In the case of schools, we opened 5 new schools at the beginning of the year and acquired another one later in the year. And these schools, as they enter their inevitable early period of the life cycle, are a drag on the results, with a result that in the short term, schools division has felt the pressure on margins, which have declined slightly, resulting in only a 1% increase in the operating profit contribution from the schools division. But the increased student numbers and the revenue growth are expected to convert into profit growth as well in the medium and longer term, making for exciting prospects in the schools division. In the tertiary division, completion of the restructuring and re-engineering of the business after the setback of 2012, coupled with strong revenue growth and good first-year and returning student enrollments, has meant that the business has been able to grow its profits in the year by 97%. The staffing division continued to experience tough employment markets in the wake of the lengthy strikes and other economic factors creating headwinds, but nevertheless continued to give a strong return on capital, positive cash flow, and a solid profit contribution to the group as a whole. Regarding the prospects, the most important feature of this is the rollout of this investment strategy that I've just described to you. It's going to be an exciting developmental period for the group, and I have great confidence in the new CEO who's been appointed, Leslie Marstorp, and his ability to take the company and the group forward into this exciting new era.